Before we start our today's lecture, check out our 7-Figure Traders program, a program dedicated for you to become a high-performance trader, only going for $115 per month with trading signals included. Find the link in the description box below and join the winners. Hello traders, welcome back to Bunnex Investment Group. In this video, we are going to talk about a very simple trading setup. I've actually depended on this particular setup to pass several of my challenges. So what is that particular setup? It's basically an M or a W depending on market context. However, there are rules to actually trade this particular setup. So in this case, we can see there is a pattern which you can name, or any kindergarten student can actually say this is an M pattern. There are clear legs, first leg and then second leg. However, the market actually throws these a lot on our charts. And if you do not know when to take them or which ones to take, you will definitely be trapped. Being trapped is the worst thing that you can do, and we wouldn't want to have you trapped within the markets. Therefore, we will actually need to know the exact positions to actually expect them. All right, so where do we expect the M's and W's? We expect these M's and W's whenever there is a peak formation low or a peak formation high. We need to count levels up to 3 or to find reset structures for us to get these particular points. But for the purposes of those who are not well versed with our trading method, we'll actually try to simplify and use other means to actually get these particular patterns. How do we know that we are at a peak formation high, peak formation low, or reset peak? We'll actually try to use the EMAs that are on the charts. As you can see, I have yellow, red, blue, white, and 800, which is in dark blue. But all these EMAs, what we want is the 50 and then the 200 EMA crossover. So for the purposes of those who keep on asking in the comments, what are the periods or what are the settings of the EMAs? This blue one is a period 50. Period 50 applied to close, as well as this one is a period 200 applied to close. So when we see a crossover of these two EMAs, we know that this particular point is a probable point of peak formation low in this particular instance. So if we have a peak formation low, we are only going to expect to see a W, but not on the same day as these EMAs have crossed over. We need that W to be at least at the 200 EMA or slightly above the 200 EMA. In this particular case, we can see the market went to the upside. We did not have price interaction with the 200 EMA, and then later price interacted with the 200 EMA at this particular point. After that interaction, the first interaction gave us a 513 EMA cross to the upside, 513 EMA cross to the downside. After that, we can see that at the first leg level, which is this one, that is where the market came and retested to give us this particular shoot to the upside. Let's now have more examples on the points where we were going to make our entries. We are going to use pound against the dollar starting from 1 March 2024. In this particular case, I've already marked the points where we term peak formation low or peak formation high. We had a crossover, and after that crossover, there was a beautiful W pattern at the 200 EMA, and a 2-to-1 reward to risk ratio was going to be satisfied. Another point where we had a crossover of the 250 EMA at this particular point, this held as a peak, and we can see an M pattern being formed. Unfortunately, the pattern did not move, and we are not going to be holding trades overnight. In this case, Wednesday was actually day changing into Thursday. Therefore, this was going to be closed at this particular point just before the widening of spreads. we had another crossover, meaning this was a possible point of peak reset. From that crossover, we were now scouting for patterns. An M pattern was issued, first leg, second leg, and the market went to the downside. From the first leg point to the second leg point, a 2-to-1 reward to risk was actually going to be satisfied from this point to this point. Let's move forward. We can see another crossover that occurred at this particular point, and then an M pattern was issued. In this case, first leg, second leg, and the market went to the downside. If you were going to say this was going to be first leg, this was not going to be a valid point of entry. Why? Because of the rule that we've said we do not hold trades overnight when using this particular strategy. This was not going to be a W pattern because we've said the 200 EMA cross must be prior to the day of the setup occurrence. Therefore, we were not going to have a pattern on this particular day. There was a crossover, a beautiful peak formation high, and now first leg, second leg, and the market dropped to our direction. Another peak formation high where we had a crossover, first leg, second leg, and the market dropped in our direction. Another peak formation low, first leg, second leg, the market went our direction. In this particular case, this was now a losing point where we can see a crossover was issued, but unfortunately the market gave us a pattern, but the pattern went otherwise. This is something that occurs within the markets. We cannot expect to win each and every time or all the time. That are the patterns that we had for our examples. So for you to fully understand, you need to actually go through the training. The training will take you from the stage that you are right now to the stage where you can actually count levels properly. And when you can count levels properly, it means you can actually trade the rightful patterns in line with the market maker trend. You will be able to actually be able to select pairs that are going to set up for that particular day as well as over the week. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.